Hello there, this is James, and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy NFP Friday. In today's program, I want to discuss how currently the Greenback is basically getting kicked in the face by the majors, and the reasons and the driving factors behind that. And of course, NFP happening today could damage the dollar even more. But before we get into all of that, don't forget these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So, like I say, we've had the Greenback has been on the back foot, and he's been on the back foot for quite a while. In fact, November was the worst month for the US dollar since 2010. 2010. This is how bad November has been for the US dollar. I mean, just if we just sort of compare it to the majors and how it's doing against the majors at the moment. The euro dollar is currently trading at a 5-month high. Don't forget, 5 months ago, or below, you mean only a couple of months ago, it was under parity. And there was talk about how low could the euro go. But now it's trading at a 5-month high. In fact, it's at the highest level since June the 29th. The other big one, which is I think is getting a lot of attention, and we're going to have a close look at this in a minute when I bring up the charts, is of course the dollar yen, because that plunge is intensifying. It's under a huge amount of pressure. And in fact, it's not just the dollar yen, which is under pressure, or the euro dollar, which is skyrocketing. I mean, the dollar Swiss franc is currently trading around a 2-month low. The British pound US dollar, that's another story, trading currently around a 3-month high. Aussie US dollar is trading at a 2-month high. And dollar CAD is trading near a 2-month low. Now, don't forget, we've had so much dollar strength this year, mainly because of the actions of the Fed. And obviously the safe haven status that the Greenback is happy to claim. But we are really seeing a lot of dollar weakness now. And I'd say a lot of these really interesting stories. The FX market at the moment, I'd say I'm a currency trader anyway, so I like the FX market. But the FX market is just so fascinating at the moment, where we're looking at the stories only a few months ago. I mean, look at the cable, for example. I mean, there was even talk of the cable at some point dropping to parity. You know, it's now trading at a 3-month high. But what's the main sort of factors behind all this? Well, obviously, we have got the anticipation that inflation is cooling. Don't forget, we had obviously core CPI came in at 6.3 opposed to 6.4 or 6.5 as expected. Headline inflation in the US dropped to 7.7. Don't forget, PCE index yesterday came in lower. Month on month came in at 0.2 versus the expectation of 0.3. So there is signs of inflation is finally cooling. I'm going to make another point about that in a minute, though, before we go on. But anyway, and Powell is currently now dressed up as a dove, apparently. Now, this does amuse me slightly, how the market has taken to his speech 2 days ago, because basically what he said was nothing new to what we already expected, what we already anticipated in the market. Yes, we've been pricing in a 50 basic point rate hike in December anyway. Okay, he's just underlined it. But the other things he said is, again, what he said, which scared the market, are the FOMC minutes. FOMC press conference a couple of weeks ago, where he said the headline rate might be higher, and we have to maintain it for a small amount of time. But still, you know, it's the same thing. So I don't know what the market is hearing slightly differently. They're taking his statement as dovish, but at no point at all has he ever said anything about a Fed pivot on a high, you know, in the future. He's never said that. He's never done. In fact, he said the opposite. We're going to have to maintain a high level of interest rates for some time. He keeps saying that. And he keeps going on about history shows that loosening too quickly can have a negative impact. But still, the market is taking it as, you know, as a pivot is coming, or pivot will be sometime next year. I don't know. Like I say, the market's pricing in for the end of 2023 for a pivot. But this is what the market's getting excited about. This is why we're seeing a weaker dollar. Okay. But like I say, again, about inflation, 7.7 is still miles away from the 2% target. 6.3 is still 6.3. It's still the same what it was 2 months ago. So again, like I say, we're getting ahead of ourselves. But anyway, before we go into the market, actually, let's go and look at the market now. Let's have a look and see where we're doing. Let's start off, of course, with the euro, because like I say, the euro is trading currently around a 3-month high. I mean, look, we're above the 1.05 handle, okay? 1.05 handle. And like I say, we're above, that's indicated on the 30-minute, but we actually finally broke that key level we've been watching for quite a while, 1.0388. But if we look on a daily, okay, this is for me is what's pretty key at the moment. We're actually above that 200-day moving average, which, as we can see, for several trading sessions held. So is above that. The next key area potentially for me, an area of interest I'm going to be keeping an eye on, which could be changed today, would be just a little above that, right? 1.6017. Again, I'm going to talk about that in a minute. What's coming up today, which could change a lot of things. If we have a look at the sterling as well, the British pound, US dollar. Again, we finally broke through that key level yesterday, actually, 1.21092, which was the 200-day moving average. And again, what makes me laugh about this, don't forget, only back in September, there was doom and gloom for the old sterling. There was talk of parity, but what a turnaround! I mean, to be honest, the sterling's an interesting picture for me because the UK is about to fall into a recession if it's not already in a recession anyway. So yes, Sunak's come in and he's calmed, obviously the government or the political aspect of the UK a little bit, but really it's benefiting from the dollar. I have a feeling that we're going to see more pressure on the sterling in the future as more economic data start coming in from the UK. But at the moment, let it enjoy the weakness in the US dollar like they are. But like I said, I want to look at the dollar yen as well. I mean, look, we've had such a long uptrend with this pair. But then ever since we have had a weaker dollar, it's now breaking below. And this was key for me. I've been watching this for several days. It's now breaking below that 200-day moving average. Currently trading at 134.058. Next key area for me, okay, is that Fibonacci 50 ratio just above the 132.61 level. That is going to be an area of interest. And that's what I'm keeping an eye on. And guess what I'm going to talk about now? Go on, have a guess. You've guessed it, my yellow metal. Obviously, this has really benefited as well from the weaker dollar. However, it is still capped, though it's above the 200-day moving average. So a key potential area of support there, maybe around 1,759. It is still testing that key area of interest for me, $1,803 an ounce. And then, like I say, we've been testing it for quite a while. We can't seem to break it at the moment. However, I've got some comments. Sorry, I've been getting away. Gold. Yes, of course, I'm going to talk about gold. I'm a gold trader. I'm a gold bug. It's my first love when it comes to trading. I always talk about it. But yeah, I'm sorry. But like I say, anyway, it's still being held at that key area of $1,803 at the moment, which I'm keeping a close eye on. Let's have a quick look at the S&P 500 as well, see how that reacted. Obviously, it's above the 200-day, which was key. This is on 30 minutes. Sorry, let's have a look at the daily so we can see a bigger picture. We're above the 200-day moving average, currently trading at 4,072 points. But like I say, it can't stay above that psychological level of 4,100 points. So that's the next key for me. However, all this can change, obviously, because the markets can do that. But today, we have NFP day, obviously. And this is going to be potentially a key market mover. A key market mover, potentially. Because the expectation is for it to come in lower at 200,000. Previous reading was 261. Okay, 261. Don't forget the ADP came in lower at 127,000. So it was lower. I don't see the connection between the NFP and ADP, though some people do. But and the question I have to ask, are we going to see any potential surprises? Because we just have a look at the last two. October, it came in at 261. Expectation was 200,000. September, 315,000. Expectation was 250,000. So each time this job number has surprised us quite recently. So I know the market is hoping to see the labor market starting to fall, but it's been pretty solid. They're hoping to see it to fall. So if it does come in, I think if it comes in a lot lower than 200,000, we could potentially see further pressure on the US dollar. If it comes in around 200, maybe slightly above, then we might see a small bounce. But anyway, we have to see, because this is potentially big news with the Greenback today and for the market mentality. Something else is coming out today as well. Obviously, US unemployment expectations 3.7. The previous was 3.7, and average earnings is supposed to show a drop. Expectation year on year 4.6. Previous was 4.7. So we're supposed to see a drop in average earnings as well. Now, because this is a big event, obviously for obvious reasons, I'm going to be doing a watch along, like I always do for big events like this, which I absolutely love doing because I get to share this event with you good people. Of course, I'll be going on at 1:20 p.m. UTC, 10 minutes before the actual event. So please come along and join me. In those 10 minutes, we'll have a quick chat. We'll go through some information and look through some potential scenarios. I hope it's a positive report and the US dollar picks up. Dollar trader, good for you. Well, like I say, higher than 200. Like I say, we could see a potential dollar bounce. Because that shows that the labor market is not, still quite stable, but only initially. I don't think it's going to save the dollar at the moment. I think the basic market sentiment at the moment, unless we get something really drastically change, at the moment is pretty bearish on the dollar. But let's see. But anyway, yeah, we're definitely doing a watch along. Yay! Yeah, I know everybody. I like watch alongs as well. They're really good. So yeah, we'll be doing a watch along going at 1:20 p.m. UTC, 10 minutes before the event. We'll discuss a few information, some details, and of course, we'll go through some scenarios. And more importantly, watch the big event as it unfolds. So please come and join me for that. In other news, I want to quickly talk about something else. OPEC is meeting again on Sunday, which has got the market a little bit spooked. Because there is rumors that they may do further cuts in production to handle the Russian price cap, which is about to go into place. Don't forget, back in October, they met and they agreed to reduce production by 2 million barrels per day to, boost oil prices, to keep it stable. Though in fact, that 2 million is actually more like 900,000 barrels a day. But anyway, still it was a cut. So they are meeting on Sunday. There is rumors they might do a cut and production, which could obviously, but bear in mind, we got the demand concerns from China because they still got their lockdown restrictions in place. Could give oil a little bit of a boost. So it'd be worth keeping an eye on it. There was a report from the Wall Street Journal, though, on the other side of things, who said that they might actually do an increase in production. But I think the market's bracing themselves for maybe a slight cut. But we'll have to see what they say or what they decide on Sunday. Anyway, that's something to look out for. The equities, as they currently stand, the FTSE slightly in the red, negative 0.25. DAX currently trading in the green, 0.33% up. And your stock 50 currently trading in the green just by 0.03%. Don't forget, you can ask me questions anytime at all, or simply say hello, or say yay about the watch along. Entirely up to you. Don't forget as well, if you think of a question later, you can put it in the comment section either on YouTube and Facebook. I will see them and I will reply to them next time I go live on air. So bear that in mind. Which, of course, will be at 1:20 p.m. UTC for the Tixee Live watch along of the US non-farm payroll. I mean, I'm not expecting, to be honest, the fireworks we had with the US CPI a couple of weeks ago, because that was fireworks. That had movement. But I am expecting some sort of action from the NFP. So should be quite an exciting event. Okie dokie. If there is no questions, not a problem. Not a problem. Like I always say, if you're watching me on Facebook and you enjoyed this little episode, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this little video, found it interesting, useful, and you put up with me, give me one of these. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only. and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.